Alright, so hi, this is the Cambridge IGCSE accounting paper 21 from the May June 2020 series. As you know, this year the exams did not take place because of the global pandemic, so they actually did a good thing by uploading the papers. So let's just start. The question number one, he says the Z Sports Club has a shop which sells sportswear. The following details are related to the shop for the year ended 29 February 2020. All right, so he's given you the opening inventory, closing inventory, purchases, and the markup, and he's asking you in part A to calculate the shop sales for the year ended 29th February 2020. All right, so he's given you the markup, which is 40%. This means that the selling price for the whatever it sells, the sportswear, is going to be 40% above what it cost the sports club. Markup basically means that you have to add 40% of the cost into the cost to make the selling price. So I've written the headings down to save time. One thing to note, I have used short forms in my answers over here, so you are requested not to do that because this will not be taken lightly by the examiner. Alright, so sales, we have to calculate these. So we have everything for our cost of sales and the gross profit. He's given you the markup. So let's just add the values. The opening inventory is given to you, it's 900, so let's write that down. So the purchases are actually 7600. The closing inventory he's given you is 970, and that is going to make up your cost of sales, which is actually going to total to 7,530 dollars. All right. So now we have the cost of sales and we have the markup, so we can calculate the sales. So 40% above 7530 is going to actually give you a total of 10,000 10,542. Again, now let me just explain how we got this. If you calculate the 40% of 7,530 and add it to 7,530, you're going to get 10,542. Similarly, you can also calculate 140% of 7,530, and that is also going to give you the same answer. And the gross profit we have is uh, put that in brackets. The gross profit is going to be $3,112. So this one was simple. Alright, so in the next part he's saying all the shop sales and purchases are made for cash, all the club's receipts are paid into the bank, and all payments are paid by check. Alright, so on 1st of March 2019 the club's balance was overdrawn by 845. So the balance brought down is going to be over on the credit side for the bank account because it's overdrawn. In addition to the shops and sales, in addition to the shop sales and purchases, the following receipts and payments were made during the year ended 29 February 2020. All right. So he's given you a bunch of transactions and such, and let's see what he's asking for. He's asking for the receipts and payments account. So I've written everything down again, and here this is fairly simple. He's told you everything that you need to know. Subscriptions received, this is an income, so it's going to be over on the receipt side. And competition fees received, this is an income as well, so it's going to be on the receipt side. So let's just write these down. The subscriptions received is 11,400. All right, subscriptions is 11,400, and the competition fees is 915. So write that down. Right. Alright, so do not forget that he said in addition to the shop sales and purchases, which means that we have to consider shop sales and purchases in our receipts and payments account as well, because receipts and payments account includes shop sales and purchases, because money is going in and out. So the shop sales we calculated from the last part is going to be $10,542. Right. and the balance brought down he's given you is over on the credit side. Why? Because the bank balance is overdrawn, so it's going to be on the credit side. Yeah, and it's overdrawn by 845 dollars. So write that down, $845. And then he's given you a bunch of payments over here. Competition prices, 390, purchases of fittings, 4,000, rent and insurance, 45.75, and then wages of the shop assistant. So let's just write all these down on the credit side, which is going to give you 7,600 for the shop purchases. Competition prices are 390, fittings are 4,000, the rent and insurance are 45 and 75, and then the wages for the shop assistant is 2000. And then when you balance this all down, the side is going to total 22,857, 22,857, and this one is also going to total 22,857. And then you can calculate the balance carried down by deducting the sum of these by 22,857. That is going to give you a carry down of $3,447, and that is going to be the answer for this. This is going to be carried forward to the next year. Do not forget to carry it forward for the next year because this has one mark. So carry this forward, 3447, and that is it for this part. This was really easy. Basically you just had to write everything down. It was really simple. Receipts are over on the debit side, and then the payments are on the credit side. Technically the receipts and payments account is your bank account, so you can treat it as that. Alright, part C. He says the club's bank statement at 29 February showed a positive balance of 7162. Alright, on comparing the bank statement with the cash book, the treasurer found competition fees which has not been recorded by the bank. A check paid for $25 for competition prizes had been charged twice by the bank. Alright, let's just go through these slowly. So we're going to start by from the bank statement balance which he's given you. You can also start by the cash book balance if you find that easy, but in this video I'm going to go start with the bank statement balance. All right, so he's giving you a positive balance of 7162, and then he says that competition fees has not been recorded by the bank. So competition fees, all right, and then the check paid had been charged twice by the bank, all right, and then he says the payments 4,000 was made. All right, so I've written it down like this, so in the opposite direction. So let's just start from the third point here. He says the payments for fittings, $4,000 was made on 27 February 2020 and had not been recorded on the bank statement, which means that this actually should have been deducted from our bank account, right? But it wasn't. So we're just going to deduct it here. Let's just decrease the bank account by $4,000 right here. All right. And I didn't need to put the brackets there, but all right. All right. So, and then we have here, yes. All right. The second point is going to be a check paid for $25 for competition prizes had been charged twice by the bank, which means that we actually had to pay $25, but the bank shows that we paid $50, so we have to increase our bank balance by $25. Why? Because we actually had to pay $25, but the bank shows we paid 50, so it should have been 25. So let's just increase the bank by $25. This is going to plus 25. And then the first point says competition fees, $260 had not been recorded by the bank. Now competition fees, let's just go up and see. He says that the competition fees are actually received to us. So this is an income, and this was not recorded by the bank, so we have to increase our bank account by $260. So increase this by 260, and then you get a total of the cash book balance, which is going to be yes, it's going to be 3447 again. All right, and we know that this answer is correct. Why? Because we calculated the closing balance of the bank account or the cash book, which is the same as the answer we have arrived at here. So we know that this is correct. Part T, he says, say three differences between a receipts and payments account and an income and expenditure account. All right, so this is fairly simple. You should have this memorized, or otherwise know what both accounts are so that you can do this. So the receipts and payments account, the balancing figure represents the bank balance. We all know that. We just did that right now. The bank balance or the cash book balance in the receipts and payments account, because like I said, the receipts and payments account is similar, or technically is the bank account. While the income and expenditure account is like the income statement, so it's going to the balancing figure for the income statement. Sorry, the income and expenditure account gives you the surplus or deficit of income you had during the year. Similarly, the second is going to be that the receipts and payments account has no adjustments for accruals and prepayments. Why? Because we only write down the amount of money we paid in or out. We don't need to be concerned with accruals or prepayments here, because we just write down the money we paid out or in. Well, the income and expenditure account has to contain the money that was charged for the year, and we have to adjust for accruals and prepayments. For example, if you prepaid for the next year, that is not going to be included in this year's income and expenditure account. So that's similar like the income statement. The third point is going to be includes all money received and paid out. Simple as that. And this one includes incomes and expenses. So expenses may include depreciation, etc., etc., non-monetary things that the receipts and payments account will not have. So this is another difference. In part question two, he says Amy provided the following balances from his books. Right, so it's going to be aim, I think. Provided the following balances from his books at 31st March 2020, and then there's a lot of things balances here, and then he's asking you in part A to prepare trial balance for 31st March 2020. Show the difference in the trial balance as a suspense account balance. All right, so he's given you loads of things here. I've written down the basic things over here, so let's just go through them and then write them down together afterwards. So the capital we know is going to be on the credit side. Whoops, yeah. All right, so the capital is going to be on the credit side because it's on the credit side. Drawings are debit in nature, so they're going to be on the debit side. Equipment at cost is an asset, so that is going to be on the debit side. Provision for depreciation of equipment, that counts against assets, so that is actually going to be on the credit side because all provisions are credit. Inventory is an asset, that is going to be over on the debit side. Trade receivables is an asset, debit side. Bank overdraft is a liability because we owe the bank money, so that is going to be on the credit side. Trade payables is a liability as well, that is going to be on the credit side. Sales is an income, that is going to be on the credit side. Purchases is an expense, that is going to be on the debit side. Purchases returns is counts again against the purchases, so that is going to be on the credit side. And carriage inwards is 640, so carriage inwards is the money that we pay, so that is going to be an expense for us, so that is going to be on the debit side. Discount received is credit in nature because that is an income. All right, so it decreases the amount we have to pay, so that is an income. Commission receivable is an income because receivable, so that is going to be credit. Rent and insurance we have to pay, that is a debit expense. Office expense is also debit. So let's just write all of these down. I've written down all of them over here to save time, and as you can see, we actually completed all the natures of all these transactions up there. So I wrote all of their values down. Now the problem is that the credit side of the trial balance is totaling to $50,019, and the debit side is a bit less than that. So in the question he says that show the difference in the trial balance totals as a suspense account balance, and he's given you an option for the suspense account, a place for the suspense account balance. Right. So we can just calculate the balancing figure of that is the suspense account here, because we have the total. So the debit side is actually going to have to total $50,019 as well. So that means that the suspense account, you can total up all the debit side values and then subtract them by the total, which is $50,019, and that is going to give you $369 for the suspense account. So this was fairly simple. All you need to do is make sure that your debit and credits are really strong, and that's just basically how you would do this. Part B, he says complete the table to show the entry. Okay, Am later discovered several errors have been made in the accounting records. Part B, he says complete the table to show the entries required to correct each error. To correct each error. The first one has been completed as an example. All right. So we don't need to see that. All right. Office expenses, which is $240, have been credited to the wages account. No debit entry had been made. So this is a problem because the wages account is a debit account because it's expense. It's an expense, right? And office expenses is a debit account as well. So firstly, to cancel the effect on the wages account, we have to debit the, because the amount has been credited to the wages account. So we have to debit the wages account by, this is going to be what, $240, right? And then we are going to debit the office expenses account, by $240 because this is the original entry that should have been made. So to balance this side, we are going to credit the suspense account by $480. All right, next one. So this one is done. Whoops. All right. The purchases journal for March 2020 was 2165. This amount was incorrectly recorded in the purchases journal account as 2651. So this means that the purchases have been overwritten, right? And the difference is actually going to be the difference between 2651 and 2165, which is going to be what is this, $486. So we have to, firstly we have to compensate the purchase account, because well, it's overdrawn, it's overwritten, right? So let's just, the purchases account is debit in nature, it's an expense, so we have to credit the purchases account by 486. So purchases, we'll just credit that by 486, and then to balance this entry, we have to debit the suspense account by 486 as well, right? So the purchases account was overwritten. We have to decrease the purchases account, which is crediting the purchases account by 486, and then suspense account will debit by 486. Done. So the third one says an insurance payment $375 had been correctly recorded in the cash book, but no other entry had been made. So insurance payment is going to be debit in nature. We are going to debit the insurance account by $375, and then the suspense account will automatically go 375 because the payment has the entry in the cash book has been made, but the insurance account wasn't even touched. So we will debit the insurance account. It's an expense account, so debit it and credit suspense. All right. The purchases of equipment, $800 was correctly recorded in the cash book but debited to the office expenses account. So office expenses account is a debit account because it's an expense. So to cancel this effect, we just have to credit the office expenses account, the office expenses account by $800, and then debit the equipment account by $800 again. So no suspense account needed here. So simple as that. And then in part C, he says prepare the suspense account. Start with the difference on the trial balance prepared in part A. All right, balance or total the account as necessary. All right, so the difference from the trial balance, we calculated that together, was actually, let's go up there and see, that is $369. So we have to start with that. So that is going to be $369. And then we have made the suspense account transactions over here, so you have to copy them here. So the suspense account is actually getting credited here. So over on the credit side, for the credited against the wages and the office expenses account. So we have to credit the wages and the office expenses accounts in the suspense account. So we'll write them here. Office expenses and wages here were 240 each. So that is going to be 240. And then let's see what else we have here. The second entry we had was credit the purchases account. Oh, sorry, debit the purchases account in the suspense account by 486. So we have to debit the purchases in the suspense account by 486. And then similarly, in the third transaction we did here was supposed to be credit the insurance account by 365 in the suspense account. So that is going to be 375, and then you can balance this out. This is going to be 855, 855, and then this is going to be 855 as well. So that's that. All right. So basically why we did this was because the wages and the office expenses account, for example, were being debited here, but then when we have to put them in the suspense account, we're going to credit them in the suspense account, right? So to write that, we actually credited them in the suspense account. So simple as that. All right. So question 3. Question 3, he says Chippo owns a manufacturing business which produces product S. She provided the following information for the year, and then there's some information here, and then some additional information here, and then in part A, uh, he says prepare Chippo's manufacturing account. So the basic format for the manufacturing account is that we deal with the direct materials first, and then the direct wages or the direct expenses, and then in the latter part of the account we deal with the factory expenses and then work in progresses. Alright, so he's given you everything you need here. You just need to have the format for the manufacturing account memorized. So I've written down the headings as usual. So first off, like I said, we start with direct materials. So the opening inventory of raw materials. So he's given you this. The opening inventories for raw materials, the work in progress, and the finished goods. So he's given you everything you need, as well as the closing inventory. Now one thing to notice here, he's given you that, he said that factory machinery is depreciated at 20% per annum using the reducing balance method. So this means that this is going to come in the overheads section of the manufacturing account, the factory expenses account section of the manufacturing account. All right. Rent and insurance is to be split equally between the factory and the office. So 50% of the rent and insurance is actually going to be on the manufacturing account. So that is done as well. The annual salary of the factory supervisor is 28,500. So that is going to come on the factory overheads as well. Alright, so all three of these are going to be on the factory overheads or the factory expenses section of the manufacturing account, and then he's giving you the closing inventory for the raw materials, the work in progress, and the finished goods. So let's just start writing things down. We start the raw materials section by writing down the opening inventory of raw materials that was left last year. That is going to be 3120. So I'm just going to write them down because I have them I wrote them down for myself on a paper. So you guys obviously will have to search for these over on here, but I'm just doing this to save time. And then purchases for raw materials, he's given you this as well, so we have to write that down. That is going to be 46,500, and then we subtract the closing inventory of raw materials, which is going to be $3,000. So that is that section taken care of, and then we can just add in the direct wages. He's given you that as well. That is going to be direct wages. Where is it? Right, the wages of factory operatives is going to be 38,250. So write that down. 38,250. And then the direct expenses, the royalties, which he says up there is going to be 4,500. Oh, sorry, not 4,500. That is actually going to be 7,690. 7690. Right, so the wages for the supervisor is not added in the direct expenses because that is not directly involved with the cost of the product, right? That is going to be over on the factory overhead size, the section. You have to memorize that. To be honest, I memorized that because I quite didn't really understand that when I was doing this as well. So the prime cost is going to sum up all of these values, which is going to give you a total of 92,560. Right. These two should have been over on this side, but that's to be honest, that's okay. So that is that. You have the prime cost now, and then factory overheads. The wages for the factory supervisor is over on the factory overhead section. Like I said, you have to memorize that. That was he said up here that is 28,500. So write that down. 28,500, and then the factory general expenses is going to be 4,500. That is given up there as well. Factory fuel and power, that is going to be 5325. We are given up every value is given up there, obviously. And then okay, so the rent and insurance, he says that it has to be split equally between the factory and the office. So that means equally means 50%, right? So the rent and insurance, the 50% of $28,000 is going to be over on this side. So $28,000, and then you can multiply that by a half. That is going to give you $14,000. That is supposed to be over on the factory overhead section. And the depreciation for the machinery is actually going to be the cost of the machinery subtracted, and then we will subtract the accumulated depreciation of the machinery, and then by using the net book value, we are going to calculate the depreciation charge for the year. So that is actually going to be the machinery at cost, which is going to be 60,000. We will subtract the provision for depreciation, that is the accumulated depreciation, from the cost. That is going to give you 60,000 minus 21,600. All right, and then when you have the answer to that, you will just multiply that by 20%. All right, and that will give you the depreciation charge for the year, which is going to be 7680. So let's just write that down, 7680. All right, and we have all these over here, and then he's given you opening and closing work in progresses, right? He's given you that, so you have to deal with that as well. The opening work in progresses are added because we completed the work in progresses this year, so that means that it cost us. So that is we're going to add the $5,400 for the opening work in progresses, and then we're going to lessen the work in progresses of the closing date, right? Because we didn't complete them. So that is that. Let's just add them. Add opening work in progress, which is going to be 5,400, and then decrease the closing work in progress, which is going to be 5590. 5590. Right, and when you uh, sum up everything and subtract everything, that is going to give you a total cost of production of 152,375 dollars. So that is going to be your answer. For this question, basically you just need to have the format revised, and you should know what you're doing, and don't make stupid mistakes while writing down the values or the calculating these sort of small calculations. So these are easy 10 marks for you. In part B, he says prepare Chippo's income statement for the year ended 30th April 2020. Right, so the income statement, this is going to be fairly simple as well. So you have the revenue, which is $254,000. So just write that down. $254,000. Whoops, orange. Right, and then lessen the cost of sales. So in the cost of sales, after the income statement account, sorry, the manufacturing account, obviously you have to deal with the opening and closing inventories of the finished goods, and then the purchases of the finished goods. So this is how well we generally do it. So Obviously you have to know that. So he's given you the opening and closing values for the finished goods as well as the purchases of finished goods. So this is all going to come in the income statement here. So let's just write that down. The opening inventory of finished goods, that is going to be 8,220. And then the cost of production, alright, let's deal with that later. Purchases of finished goods. He said we bought finished goods as well, so that is going to be $59,000. And then closing inventory of finished goods. He's given you that above as well. So this was actually $7,885. And then the cost of production is the cost of the goods that you made, and that is 152,375. So add that here, 152,375. So really simple as that. Just balance this out, decrease sorry the subtract the cost of sales from the revenue, and then you get the gross profit of 42,290. I forgot to write the cost of sales, which is going to be 211,710. uh, right, so that's that. Simple as that. We deal with the finished goods in the income statement as well as the cost of production that we made. Right. Part C, he says complete the table, whatever. Right. To indicate which, whether each of the following actions would either increase or decrease gross margin. So what is the gross margin? So the gross margin, we know, is a ratio combining revenue subtracted, and then subtract the cost of sales divided by revenue, right? So you have to know this, otherwise obviously you won't be able to solve this. So the action, increase wages of factory supervisor. So the problem with this is that if the factory supervisor's wages increases, that means that the cost of sales increases, right? So that means, and if the revenue stays same, the cost of sales increases, that means that the gross margin is going to decrease, right? Because it's on the numerator, so it has a direct relation with the gross margin. So that is that. Increasing the wages for of the factory supervisor is going to decrease the gross margin. Okay. So similarly, the reduced trade discount allowed to customers. So the problem with this is that if you reduce the trade discount allowed to customers, that means that the customers will pay more. So the revenue will increase. Right? So the revenue will increase, and that means that the gross margin will increase because the sales increase. Right? So that is that. Okay, in part D, he says Chippo is considering converting her sole trader business into a limited company because she thinks that this will make it easier for her to obtain finance for future expansion. In part D, advise Chippo whether or not she should convert her business to a limited company in order to obtain finance. Justify your answer by providing a all right, whatever. So, like I said, it was pretty awkward for me to find that Chippo is operating as in the manufacturing business as a sole trader, because that doesn't really happen. If you have a factory and you have machinery and all that good stuff, then you technically should be a limited company because it is a big deal, right? So, advantages of converting to a limited company would be to raise finance, to increase her finance. She can issue shares, right? So that is going to give her money for whatever she wants to do with it. And another advantage for this would be that usually companies operate with premises and machinery. So the problem is that she has everything she needs to have to be in a company, to be a company, but she is not a company, so she doesn't really have to give much in order to convert her business into a company. So that is an advantage for her. She has everything she needs. The disadvantage of converting to a company is that there will be some costs and expenses, some legal expenses you have to pay to the government for registration, etc., etc., to set yourself up as a company. So you have to watch out for that. There will be some costs relating to that. Another disadvantage can be the company will involve partners or shareholders, so the control will be lost for Chippo, right? So shareholders will come in, they'll give you their ideas, and you'll be bound to listen to them. So that is going to be a disadvantage for her. So that's that, and then you can just advise whatever you feel like is the strong side. I'd say that she should, because that is going to give her finance, and that she should convert to a limited company, that she has everything she needs to, and she will raise more money that way. So yeah, that is the end of that is yeah that is the end of question 3. I'm going to cover the last 2 questions in another video. If you like this, and if this video helped you, like and subscribe. And if you have any questions or feedback, feel free to comment, and I'll see you in the next part. Thank you.